My dear students, today we are going to discuss an important topic, that is functions of a central bank. A central bank is an apex body that regulates, controls, operates and directs the entire banking and monetary structure of a country. So, a central bank is a bank which controls, operates and regulates and directs the entire banking and monetary structure of a country. That's why it is called as an apex body, a topmost body, and it occupies the topmost position in the monetary and banking system of a country. When it comes to India, Reserve Bank of India is called as Central Bank, and it has been established in the year 1935 and nationalized in the year 1949. Now let us go to know important functions of a central bank. So, when it comes to functions of central bank, these can be divided into traditional functions, promotional functions and supervisory functions. What are traditional functions? So, traditional functions are those functions which every central bank in every country performs. These are generally issue of currency notes and acting as a banker and debt manager to government, and acting as a banker to all the banks in the country, and the most important one is controlling credit in the country. So these are four important traditional functions of a central bank. And when it comes to promotional functions of a central bank, these functions are performed by central banks to protect consumers and to protect financial stability of a country. These functions are development of financial system, providing funds to agriculture sector, providing funds to industrial sector, and data collection and publication of reports regarding financial matters, and also promoting banking habits among public with the cooperation of all commercial banks. So these are the promotional functions of a central bank. And when it comes to supervisory functions of a central bank, so supervisory functions, especially in the developing country like India, have to perform numerous functions. These functions are country specific. That is, these functions will change from one country to another country, and according to requirements of the country, the supervisory functions will change. Some of the supervisory functions of a central bank may be granting licenses to banks, and inspecting banks and controlling of non-banking financial institutions. Or companies. My dear students, first let us discuss in detail about traditional functions of a central bank. Issue of currency notes. The central bank has the sole right of authority or monopoly of issuing currency notes. Central bank has powers not only to issue and withdraw, but even to exchange notes for other denominations. It issues these notes against the security of gold, bullion, foreign securities, rupee coins, exchange bills, and promissory notes. And next, banker and debt manager to government. The central bank, being the apex bank of a country, it has to work as an agent of central and state governments. It performs various banking functions such as to accept deposits, taxes, and make payments on behalf of the government. It works as a representative of the government even at the international level. It maintains government accounts, provides financial advice to the government, and it manages government public debts and maintains foreign exchange reserves on behalf of the government. It provides overdraft facility to the government. Overdraft facility to the government when it faces financial crunch, that is difficulty. And next is banker to banks. The central bank acts as a banker to all the banks in the country. So it has an obligation, it has the responsibility to guide, help, and direct other commercial banks in the country. Every commercial bank has to maintain a part of their reserves with the central bank. It is called cash reserve ratio. And the commercial banks are required to maintain SLR, and that is statutory liquidity ratio. So here the central bank controls the credit created by commercial banks by varying the proportion of reserves, cash reserve ratio and statutory liquidity ratio. So it facilitates the clearing and rediscounting of promissory notes, bills of exchange and checks, and also helps in interbank transfer of funds. Similarly, in need or in urgency, commercial banks approach the central bank for funds. That's why it is called as the central bank is called as the lender of last resort. Next comes to controller of credit. The central bank acts as a controller of credit. So the central bank controls the credit creation by commercial banks. For this, the central bank uses both quantitative and qualitative methods to control the credit. By controlling credit, the central bank achieves important function, that is, maintains desired level of circulation of money in the economy, maintains the stability in the price level prevailing in the economy, controls the effect of trade cycles, and controls the fluctuations in the foreign exchange rate, and channelizes credit to the productive sectors of the economy. And next, let us go to promotional functions of a central bank. The central bank supervisory functions are to protect consumers and financial stability, as we earlier discussed. So central bank has the responsibility to protect consumers as well as financial stability of a economy. So the following are the promotional functions of a central bank. Development of financial system. The financial system comprises the financial institutions, financial markets, and financial instruments. The sound and efficient financial system is the precondition of the rapid economic development of the nation. The central bank encourages establishment of main banking and non-banking institutions to cater the credit requirements of diverse sectors of the economy. Next is development of agriculture sector. So, India is an agrarian economy, and worldwide majority of the countries are agrarian countries. Though here the central bank has a key role to play. It takes special attention for the credit needs of agriculture and allied activities, that is agriculture related activities. It has to successfully render service in this direction. Next, provision of industrial finance. So central bank has the obligation to provide funds to industries because industries play an important role in the development of an economy. So central banks have to provide adequate and timely availability of credit to small, medium and large industry. Next is data collection and publication of reports. Being the apex monetary authority of the country, the central bank collects, processes and disseminates, that is, shares the statistical data on several topics regarding financial information. This data proves to be very useful for researchers and policymakers. And next is promotion of banking habits. And as an apex organization, the central bank always tries to promote the banking habits in the country. It institutionalizes savings and takes measures for an expansion of the banking network. Now let us go to discuss the supervisory functions of a central bank. Along with the routine, traditional and promotional functions, central banks, especially in the developing countries, have to perform numerous functions. They depend upon country to country. For example, the following are three important supervisory functions. Number one is granting licenses to banks. The central bank grants licenses to banks for carrying its business. License is also given for opening extension counters, new branches, even to close down existing branches. And next is bank inspection. The central banks grants licenses to banks working as per the directives and in a prudent manner without undue risk. Besides that is, in addition to granting license to banks, central banks also inspect commercial banks, and central banks ask for periodical information from banks on various components of assets and liabilities. And central banks also control non-banking financial companies or institutions. The non-banking financial institutions are not influenced by the working of a monetary policy. However, central bank has a right to issue directives, issue directives to non-banking financial institutions from time to time regarding their functioning. Through periodic inspection, it can control non-banking financial institutions.